Good morning, everybody. My name's Emma Mills, and I'm joining you from MasterCard, where I'm responsible for our insurance segment in our global partnerships function. And I'm delighted to be here today with Ainsley Merchant, our partner from WorldPay, to talk about the power of payments in insurance. Before we get started, I want to share a couple of words of wisdom with you from Warren Buffett, one of my faves. Under Warren's leadership of the last 60 years, Berkshire Hathaway's stock compound was twice that of the S&P 500. And he describes his investment in Geico Insurance as his best and most important. And here's why. Because insurance float is better than free money. Somebody pays you to hold it. Now, this will look like a familiar picture to those of you in the room who know insurance, but the average consumer is astonished at the relatively small margin insurers make from underwriting, and that the large majority of profit is driven from reinvesting premium. And with the average insurance transaction taking 2 to 6 payments, and when you add a claim to that, it increasing to 6 to 15, surely payments should have a bigger focus as part of insurance strategy. We help you collect premium more speedily, more efficiently than other payment methods. We help with provisioning, where you can make payments more accurately and more quickly using digital payment methods. Yet, we haven't seen the focus on payments in later years in insurance, but we're starting to see that trend change and more insurers focus on payments as a revenue driver. And we're going to spend the next 10 minutes or so before the next coffee just explaining to you why we think payments is so important, and that if you're an insurer or a platform delivering services to them, why payments should be a large part of your strategy. Again, something that you'll all be familiar with, since the early 1990s, insurance became an e-commerce business. So the rise of the internet, direct-to-insurer models, and price comparison sites mean that the majority of consumer purchases of insurance are online. This same digital transformation revolutionized payments. 70% of all consumer spend in the UK happens on a payment card. And 40% of all e-commerce transactions are enabled by digital wallets. Yet, the large majority of insurance purchases are processed on 1960s technology called direct debit. When was the last time you made a purchase online where you were asked to enter your sort code and account number? We spent some time with an insurer last week who described direct debit technology as no news is good news. And what they mean by that is that you have no positive confirmation that you have been paid for the cover that you are providing, but that sometime later you might be informed that you weren't. I'm going to hand over to Ainsley now, who's going to talk to you a little bit about some of the technologies that we see in digital native businesses and the exploitation of those technologies to drive value for those businesses, all of which are readily available to insurers, and that working with a payment partner like WorldPay could deliver you your next high-value, low-effort strategy.
Thanks, Emma. So we did some research with MasterCard last year where we looked at insurers. We spoke to a whole bunch of insurers, brokers, consumers, and what we found was insurance is one of the sectors that has the most to gain from payments modernization. And a lot of the insurers we spoke to are seeing payments as the next competitive edge. And there are 2 reasons for this. And both of them can be explained by looking at this purchase funnel on the left-hand side, where we show the customer journey from website visit down to policy purchase and the dropout at each stage. So what we found was, the first reason why payments has become a competitive edge is for carriers, the first 3 stages of this journey are, for many of their products, owned by aggregators. So about 50% for some products, up to 70% for motor insurance of the policies written are coming from aggregators. So they no longer have control over these three, and they meet the customer at the checkout initiation stage through to policy purchase, a large part of which is payments. So payments becomes a lot more important for them. And then if we look more broadly at carriers, brokers, anyone who has a digital journey that includes boarding, strategists are saying we've reached somewhat of a peak UX. So if you think back 10, 15 years ago, there were so many gains to be made by optimizing your boarding journey, right? We still had physical documents involved in the KYC. We still had loads of lengthy processes, wet signatures. There was a lot of pain that was there to be removed, and there was a super high ROI. What we find now is the ROI is a lot lower, and it's really difficult to get from a 30% to a 31%. It's super difficult. You have to spend a lot of money, do a load of A/B testing. It's not straightforward, which is causing, again, a shift towards focus on these areas, checkout to policy purchased, where actually there's a lot more gains to be made. You'll notice the 11% to 2% at these last two stages is the highest relative shift or drop even. And there are several reasons for that. One of them obviously is hesitation. Right? Some consumers are just doing research. They don't have serious intent to buy a policy at the end of it. And there's a fair bit of the drop-off that's coming from that. But what we found in our research was there's two other reasons for drop-off that are within an insurer's control. The first of those is providing the right payment method options. So to give an example here, we worked with an insurer whose one of their products was focused on the youth demographic. And we found just by switching on wallets, well, they worked with WorldPay and they implemented wallets in there at the end of their checkout, they were able to increase the final conversion by 0.3%, with percentage points, which doesn't sound like a lot, but when you're starting from a base of 2, that's an increase of premiums written by 15%. So there's massive gains to be had here, and it's a lot easier to come by than early on in the process. The second reason why there's a high amount of drop-off here is intimated here. So you'll see authorization rate for insurance is at 86% for card versus digital overall, the best practice is 93%. So there's a massive gap where we found a lot of insurers aren't using the AI optimization tools to increase their authorization rate. So not only do you need to find the right payment method, you also need to make sure you're optimizing it using the latest AI tools and using the right data sets. And that's something that payment partners like WorldPay and MasterCard can help you with. We've got some stats here, I won't go through them, but there's a lot of revenue left on the table. Just from tokenization, you can see 5 percentage point uplift in authorization approval, there's fraud benefits, and there's a lot of, like I said, a lot of process volume that we could improve. Now, if we look a little bit more broadly, it's not just the first payment you need to get right. In many senses, insurance is the original subscription business. And in a part of our research, we look to subscription businesses generally to see what the insurance industry could learn from. Everyone knows the success story of the subscription economy. From 2020 to 2025, it's gone from 650 billion to 1.5 trillion. And much of that is driven by the digital streamers, right? So your Netflix, Amazon Prime, Disney Plus. We work with 4 of the biggest 5 digital streamers. And the reason they get such crazy growth is that they've cracked retention. And a big part of cracking retention is getting your payments right. So if you think about your Amazon Prime or your Netflix subscription, you've given them the card details once, and you don't really have to think about it again. The last time I gave my card details to Netflix was like 2020 or something. I've changed the cards since, right? At one point my card was stolen, but they're using tools like Account Updater. They're using AI tools to increase the authorization rate for recurring transactions. And that's what we've done here on this right-hand side. Again, as part of our research last year, we looked at what do we see as the uplift in authentication and authorization for payment for insurers in the WorldPay book. when they're using the latest AI tools, so account updater, revenue boost, and so on. And again, we're seeing plus 3 percentage point uplift in authentication, so that's authenticating the right person is making the payment, and then a 5 percentage point increase in authorization, which is actually seeing it paid through. And like we said in the previous slide, if you're a 1 billion in premium collecting insurer, these are tens of millions, if not more, of profit gains. Also, the benefits of getting payments right aren't just on the revenue side, it's also on cost. So we looked at, well, essentially, if you get payment fraud right, you're able to get claim fraud right, or at least improve it. And the reason for that is, you can see here, a whole chunk of fraudulent claims are making up insurers' costs. There's a lot to be done. But what we found was a lot of fraudulent claims, the policies were paid for with either suspicious or fraudulently acquired cards. So if you get the right fraud identification tools, like FraudSight from WorldPay, or if you use some of the advanced AI tools that MasterCard have, you're able to identify fraudulent purchases of policies way before they get to the point that they're able to make a fraudulent claim. And just to illustrate that point here, again, using the data from our research, we were able to see a 65% drop-off in payment fraud for those who didn't have the FraudSight tool from WorldPay versus those who did. So there's massive gains to be made. So just to summarize, in terms of the P&L impact of getting payments right, it's really about finding the right payment method, optimizing that payment method, and then making sure that you've reduced fraud as much as you can on it. And that's something a payment provider or a payments partner can help you with. And we'll just close on this final slide here.
Thank you. We touched earlier on the impact of the internet, the disruptive force that created new opportunities for insurers. But we're about to experience something much more powerful. We're about to enter the era of agentic commerce, where you won't simply be dealing with your customers on a new digital channel. You will be dealing with a new, entirely new economic force of agents making purchases on behalf of your policyholders. Much of the technologies that Ainsley has been describing to you today are foundational for how to exploit the value from agentic commerce, tokenization, AI fraud detection. All of these solutions are served up for you by the payments networks and their partner companies like WorldPay. This genuinely is an opportunity to leverage high value with low effort. And we invite you to take a look at our white paper and to spend time with us at the WorldPay stand upstairs, just to understand a little bit more about what this could mean for you. Because change does happen gradually until suddenly it doesn't. Thank you and enjoy the rest of the conference.